Good afternoon. I'm Barry Wilkins with Arbor Homes, and I have one of my really good friends, Rock Plank, with Fairway Mortgage.
Hello, Barry. Excited to be here.
I'm glad you're here. The big thing we're going to talk about is the thing that some people in that 62 plus age range, maybe you've heard of Tom Selleck, get a little concerned with. But we'd like to open up and shed some light on really the positive sides of this product. And Rock is an absolute specialist at it, otherwise we wouldn't be doing this. Rock, tell me a little bit about this retirement mortgage.
Barry, this is a fantastic program. It's an underutilized program that FHA offers to individuals, as you mentioned earlier, 62 or older, or happen to be married to 62 and older, that are really looking for their retirement home. They don't want a mortgage payment. Who wants a mortgage payment in their retirement years? But they don't have to pay 100% cash, and it's just a phenomenal program that we're really, with your help, spreading the news and changing how retirement is done. Sounds hokey, but that's really what we're doing.
So in theory, if somebody's anticipating spending cash, this is a better avenue?
Sure. So why pay 100% cash for a home to not have a mortgage payment, which depending on your age, let's say plus or minus is 50%. If you're younger, you have to bring a little bit more. If you're older, you bring a little bit less. Why not have the same ability to buy that retirement home, put down plus or minus 50%, have no mortgage payment in your retirement? Use the money for something else. Even if you could afford it, why not use it for health care? Why not give it to your kids? Why not go take a really nice trip? Why not go buy an old Mustang convertible and drive around and have a good time? It's your money, and no one says you have to tie it up in your home to not have a mortgage payment.
Wow. How would you describe, besides age and that cash buyer, what other client identifiers would this work best for?
It is really for those individuals that are 62 and older. It is going to be their primary home. We have individuals that it's their only home. We have those that want to use the money and they have a second home somewhere else, as long as this is their primary home. Something else that's been very useful, and we see more of it unfortunately, is individuals who are divorcing in their later years, and especially females that are really looking for that safe community. They want the new features, they want that safety, they want their neighbors close by and a certain kind of lifestyle. This is great for those individuals who can buy that new retirement home. Their lifestyle didn't have to totally change after a divorce. So we've been able to help some folks like that, and the joy it brings them is just a phenomenal thing to experience. And their kids are happy too, because their mom, or in some cases their dads, are in a nice community and even closer to their kids. So that would be another use of it.
Yeah, and that's a valid point. When we take a look at what Arbor Homes has to offer, we have our new product called Destination, which is low maintenance. It's the target at 55 and older, which simply means all the features that most people are looking for in that 55 and older community, but not having the age restriction. And where I see a true value in this is when people are looking at, let's say, a $300,000 or $400,000 house, but they've got $150,000, $200,000 of cash. And at this stage of living, I kind of quote Shawshank Redemption, now's the time to get busy living or get busy dying. And this is an avenue of achieving your goal to both financially have cash in the bank, secondly, not have a mortgage, and most importantly, provide yourself with a quality of lifestyle that, if not now, when. What are some of the key requirements that people should know about this type of product?
Sure. It does need to be your primary home. Doesn't mean that you have to live in it, every month out of the year, but it has to look and feel as if it is your primary home. The mortgage payment is completely optional. If you would like to make a payment, you can make a payment. It's up to you. What's really cool is if you do decide to make a payment, and we have some people that do, if you want your money back, it takes you 3 to 5 business days. You can get the money back. But other than that, most people don't make a mortgage payment. All you have to do is pay taxes, insurance, and HOA. So it looks and operates as if the home was free and clear. You just didn't have to pay 100% for that privilege.
Wow.
And it's not due until you leave the home or you turn 150 years old. And yes, it's 150 years old.
That's good to know.
Yeah.
I mean, at least be aware, when you hit 150, now you're going to have to do something different. One of the things that I've heard a lot of people talk about is, the chance of losing your home. Now, the fact this is backed up by FHA, Federal Housing Administration, is there a chance that you could lose your home?
Same amount of chances if you owned it free and clear. if you don't pay your taxes, you don't pay your HOA, you don't pay your homeowner's insurance, there's a storm or something, yeah, you're going to lose the house. Other than that, as long as it's your primary residence, pay your taxes and insurance, which you have to do regardless, then there's no reason for you to lose your home.
And basically, even if, like you said, if you paid cash, you still have to pay those very same things.
Yeah, if you pay cash for your home and you don't pay the county the real estate taxes, they don't care. They're going to get their money. This is no different than that. With the retirement loan, that's all I have to do is pay taxes, insurance, live in the home, obviously maintain it, and that's it. And then when you go to sell it, you get the benefit of any of the equity. And the really cool feature is if somehow the market were just to just dive in some weird way, you're not going to be responsible for more than what your house is worth. Wow. So you get all the benefit of your house having equity, which is going to happen in 99% of all the cases. And then that 1% chance, or whatever it may be, if you're upside down, great. HUD eats that difference. And it's always titled in your name. It is your home. You sell it when you want to, transfer it when you want to. It is your home.
Right. My biggest takeaway is the fact that in a world where there are a lot of questions, trust is the one thing that people are looking for. And knowing that this loan is backed up by FHA, Federal Housing Administration, that's a program that's been in the works for many, many, many years. And a lot of homeowners use FHA loan as their primary means of purchasing a home. How can you really go wrong? With that being said, any final words?
No, this is a fantastic program that really is underutilized. And when we sit down with clients and oftentimes with their financial advisors, they're amazed about the power of this loan and how they really can buy that retirement home that they didn't think they could afford, or even if they could afford it, they can afford it in a different way and have money which they can use in their retirement for whatever else they want to. It really can be a game changer.
That's awesome.
Yeah.
The reason why we made this video is to help provide people with the information they need to make the best decision at this time in their life. My name is Barry Wilkins. I am with Arbor Homes. You can reach me at 317-281-0615. And for more information about this retirement mortgage,
my name is Rock Plank. I'm with Fairway Independent Mortgage, and you can reach me at 317-660-1739.
Fairway Mortgage, a mortgage you can trust because I've trusted them with my mortgage. Rock, thank you very much.
No, thank you. This is great, and I'm looking forward to together changing some retirements.
At the end of the day, that's what it's about.
Yeah.
Thank you.
Thank you.